Well, I'm glad to be here. I started my career at a global insurance group. It was a company that operated in 130 countries, had 1,800 subsidiaries, and the U.S. had 52 insurance companies. Half of them were life, half of them were property and casualty. That included surplus lines companies. At those times, insurance companies had almost all operational things for programs and managing general agents enclosed. But now with technology, MGAs, anyone can start one. It's very easy. Depending on what they're doing, it can be even an Excel spreadsheet. And so I'm seeing in my practice, which is a national insurance regulatory practice, MGAs coming fast and furious. What I see, sometimes there's formations, sometimes it's contracts, occasionally litigation, but other times it's enforcement actions. So some of the war stories I'll tell you today are from people who get tagged. How do they get tagged? Well, the biggest thing is consumer complaints. Those complaints can be from one impacted policyholder or claimant, or it can be from an industry source who files an industry complaint to shut down the practices of an MGA. Saw that twice, had this last year in California. So we just thought today, let's do a quick and dirty. You've heard about speed dating, right? Well, we're gonna do speed briefing today, and we're gonna go through the hot spots, the things that we're seeing frequently. So just to help you to think like, when you have an investigation, it starts with a letter, it's an inquiry. Over time, if that escalates, that becomes an investigation. Now, for an insurance company, it's called a market conduct exam, and the NAIC, the National Association of Insurance Commissioners, has rules for that. But as a practical matter, it's not much different when you're an agency. Okay, so.
And I'm Joyce, and I'm with the Compliance Division of ReSource Pro. I've been there since 2005. I was with ILSA when it was acquired, and our bread and butter is the licensing and the compliance of agents, brokers, and MGAs. When it comes to the additional compliance factors concerning like AI and anti-fraud and the other matters, this is where we work with people like Christa to be able to consult on those kind of things. So this is why we've invited her today. And as she said, this is a speed session. We have 30 minutes and a lot of ground to cover. What we'll start with today is just the basic definition of an MGA, which I'm sure you all know, but I will read through that very quickly. The NAIC Model Act defines an MGA as a person, firm, association, or corporation that manages all or part of the insurance business of an insurer, including managing a separate division, department, or underwriting office, and acts as an agent for said insurer, either separately or together with affiliates, and has the authority to act under contracts with insurers, approve and issue policies on behalf of insurers, setting rates, binding coverage, negotiating reinsurance, premium collection, policyholder premium, and remittance of funds to insurers, claims management, and then most significantly, underwriting authority. And in some states, it is defined as being a significant portion of the insurer's business. So this is something that we hear quite a bit in the when MGAs or clients come to us for assistance with MGA licensing. They say, I'm operating as an MGA. And when we share that definition and then share specifically the definition from the state about the underwriting that it needs to be about 5% or 6% of the carrier's annual gross premium, that's where we can figure out that they may not be eligible or need an MGA license for that state. So the definition that I just read excludes an employee of the insurer, a U.S. manager of an alien insurer, an underwriting manager under common control with the insurer. And with that, I'm going to turn this back over to you.
Okay, so if you're an MGA, there's two things. It's either a function of what you're doing by the state, or it would be a size test. For instance, in New York, California, Texas look at a lot of size tests. And that is if you're doing 5% of premium. So if you're having a program or for a major carrier, it's unlikely you're going to be a statutory MGA, which has reporting and other duties. You're probably a program administrator. So when you hear those two terms, that's what it's about. Remember that in business, the business of insurance, we speak in Italian. When it comes to the law, it's Latin. So basically, just know what you are and your functions, and come out. I mean, last year I had to deal with a really profitable company on the A&H side, and they made a mistake of not having an MGA license in California, and they thought that they could just maintain their broker license, and instead they were shut down. And so you don't want to lose your ability to do business in a state, right? It's not a good thing. All right, so next we're going to slip to licensing, which is it's a constant thing. Think of licensing as your plumbing and electricity. It has to be done. I always get really annoyed when I have a company come, and I try to hide that annoyance. I don't know if I succeed. And I say, well, were you licensed when you're selling in Massachusetts? And they say, well, the girl does that. You'll have to talk to her. It's like, please don't tell me about the girl. Just say, we messed up, and then I will think about a defense, all right? And because right now, if you're practicing, we are the United States of America, but you have 56 U.S. jurisdictions, 50 states plus D.C. and the 6 territories, right? So you have 56 monkeys on your back. For the most part, as an industry, we've tried to encourage the NAIC to have model rules and laws and regulations that are adopted by the states, so there's a lot of uniformity. But the devil was in the details, and that's also a competitive advantage for you. If you know how things are in Illinois or Kansas, that's a competitive advantage, and you're not going to want to tell everybody. So even though the Insurtechs would all like a federal rule, we're not going to go there. We like states' rights. Okay, all right, not to be too political.
All right, so what are some of the regulatory issues that you've seen with improper MGA licensing or other various parts of the compliance?
Okay, so first it's operating without an MGA license where you need it, or also failing to have all your producer licenses. Agent, broker, producer licenses, they can be interchangeable, but the legal duties are distinct, and they're distinct in maintaining case law. I want to be very clear that under NIPR, where there's the warehouse for licensing, if you have a penalty, make sure that you report it within 30 days. I recently had, and that's on the NIPR warehouse, and you explain what's happened, because there's mistakes happen. What I'm seeing is people not realizing how broad it is. Includes the suspension, revocations, and even if you don't admit any fault. So if your lawyer says, oh, you didn't admit any fault, you don't have to say that ex-nay on that. What the regulators have, they have a different system, RIRS, and they get to see if you had a penalty, if you have not admitted any fault. And so these regulators will then, they have the right to have automatic revocations. That stops your business. In this case, it was funny. Idaho said, you had this a problem in another state. We're not going to issue a renewal license. And so the agency called me, and I said to Idaho, I said, what's going on here? They reported on NIPR, and the response was, well, we don't consider that to be a notice to us, and you have to tell the state. So I had to gently remind the state that they signed a contract with all the other states that notice and disclosure to NIPR is disclosure to the state. But that was unnecessary, but things happen. But, the whole thing is being, and that's an outlier. But, be prudent with, changes of address, business items, additional branch offices. So failing to renew, not maintaining non-resident licenses, or we have folks who now say they're going to have a different license in every different agency in every state to avoid detection. That's a failure. The NAIC has a really, now it's Montana U.S. Representative Troy Downing. He sold a tech company that he sold to Yahoo back in the day. So he took his skills and he was able to map out all the companies and agencies. And I was invited by accident at that NAIC meeting, and I was like, oh. So it's like they have a lot more information than we do. They are using tech regulators too. So just, companies mess up, mistakes happen, and that's all part of life. But a big thing is being able to engage with your regulator.
Sounds good. Let's move on to underwriting compliance. And I thought that it was interesting, and I wanted to ask you why you included AI on this slide with underwriting and carrier agreements.
Okay, this is a bonus. We were supposed to have this little map that you can find on NAIC.org. It's implementation of the NAIC Model Bulletin. So many vendors will be coming to you with really, also where it's been adopted. We have 23 states that have adopted it. You have 4 states that have line of business specific, like Colorado. So you have California, Texas, Colorado, and New York. Keep in mind that what it's requiring is that, well-run companies survive because they have compliance is built into the way people do things. There are adjustments and microcurrents. As something new happens, it's like underwriting, do this in Kansas, do this and that, and that's how you operate. And companies that don't pay attention, they stumble, and then I get the call and they go, oh, I did not know that. And then I have to find out the facts and figure out how we can get the best thing. But for AI, and I know you're going to have problems with this because when I spoke to Chubb has problems with their vendors. Carriers will have, as part of their financial exams, information how they're using AI or how their vendors are using AI. So you can expect to have information about that. Now, a vendor might not want to show their black box of what they're doing, what's their secret sauce, but they have to be able to tell you what are the impacts, what is the testing, what is the validation, what are your records to have that. So those are things that we have to be accustomed to. We do know we have problems with bad data. California's been particularly bullish on hammering that point down. And data varies, but to the extent that data can be unfairly discriminatory, that's a problem. We are allowed to discriminate in insurance. Fair discrimination. And I do want to bring up a point that's a little different underwriting because surplus lines, which is so near and dear to my heart. We have plain vanilla insurance, like we used to call it homeowners and property. And when something was too complicated, like a dynamite manufacturer would sell it on surplus lines. We also used surplus lines in the first cybersecurity policies. For instance, when I was helping draft the first one, we worked with Kroll and Marsh. As Marsh brought the idea to us, they're like, and we were like, what do we do? We wrote a really ridiculous policy. There were 42 variations, and it was a failure. But the good thing about surplus lines is it allows you, if there's something that Verisk/ISO doesn't have, to develop your forms and rates and to tweak them. Now, I heard someone said to me, oh, you have freedom to do anything. Not so fast, Buster. You have freedom to create forms and rates for classes of business, but that's documented. You are free from form and rate filing. That's an entirely different thing. I saw 2 things recently this year that I thought was interesting. One was a Liechtenstein captive who told the Illinois federal court, you have no jurisdiction over me on federal, and this is surplus lines. And they said, not so fast. You're subject to our jurisdiction. You are insurance Illinois risk, and you're going to have to pay the piper. Conversely, in Connecticut, there was another captive, and that captive was a single state segregated cell captive, but let's say it's Wyoming, and it had Connecticut risk. Well, Connecticut court said you are unauthorized because 1, you're not whitelisted, 2, you are not on the NAIC alien insurer list, and 3, the proper due diligence did not occur for you. So, captive, we're not going to allow you to defend yourself in court. We're going to listen to the plaintiff. So that's harsh, a little unexpected, but recognize that surplus lines has its own rules. On a quarterly basis, I attend the WSIA's surplus lines law group because we have statute, we have rules, regulations, bulletins, opinion letters. They don't always, if you read them, you don't always know what you can do in a state. So in real time, being able to listen to the DOIs and the stamping offices has been good. So pay attention to what's happening, and with AI, it's a great tool. It's going to make us more efficient and keep the human in us, more efficient, but recognize that, one, that there are parameters. The things that I'm going to talk about, pay attention to your carrier agreements. Don't exceed your underwriting authority and follow the carrier-approved underwriting guidelines. Please try not to misclassify risk because these can lead to, 1, business sanctions like contract termination, state fines and penalties, legal liability. Recently, it always should be like historically the idea for regulators was the buck stops at the insurer. If there's a problem with a product or policy, we're going to attack the insurer. There was a national carrier that had filed their product as part of a group policy in one state, and another state said, you MGA, you're selling an unauthorized product. It was a 7-figure penalty that I had to negotiate, and I was very surprised because I still think that the fault was at this national insurance level. However, I was able to get a reduction and some concessions, but just be aware that besides your underwriting authority, ask the questions: is this SIR filed or whatever, or if it's surplus lines, do you have firm underwriting criteria? Okay. That's enough about underwriting.
It is enough about underwriting. We've got 6 more topics to hit and only half the time left. So we're gonna go even faster.
So I'm going to fly through premium management fiduciary duties. Had a really great Boston broker. Loved him. He was so smart. And he had, his footprint was 7 states, and he didn't understand about the fiduciary issues. There was it really wasn't his fault, but it was a policyholder issue. And so then he had a multi-state examination, and I had to help him through that. But, really, fiduciary rules, follow them. Use a bank that understands them. Don't mix your operating funds with premium. Pay your premiums to carriers on time. Maintain those premium trust accounts. And another thing is pay attention to state law about when you can charge fees and how much. It varies by line of business and role. For instance, in New Jersey, it's limited to surplus lines P&C brokers, not agents. Pay attention. New Jersey's been really harsh on that. I had 3 enforcement actions. I think that's good.
Okay, we are moving right on to privacy and cybersecurity.
Okay, so with that, we know that there's certain states, and we talked a little about AI, but New York has been really on point on that. And I look to them only because they have more information for licensees as well as their exemptions. And so I think it's a great way to educate yourself about what's required, and having your CTOs or your CIOs understand what's required. Nothing has changed, and it's whether we use AI or we use a pencil. We still have Grand Lease Bliley. We have HIPAA. We have, and my claim of fame at one time is I wrote the P&C exemptions on HIPAA, and I made an error. Didn't realize my travel accident was A&H because I was at a P&C carrier, and they were like, "Oops!" So we had to firewall off our A&H. So no one's perfect. And then watch out for it changing things. Like in California, they have Advanced Bill 75. Ricardo Lara, the commissioner, who has been in the news lately because that is rate flexibility was not allowed there, and now we know what's happening to homeowners. But there were a lot of cancellation non-renewals because of flawed aerial imagery for shoddy drone and satellite footage, and so California says they want to have transparency and accountability whenever a policy is canceled because of something. So I think drones have been so important in the insurance industry. It's been helpful. It's been helpful in things like wildfire risk. We know that in California they have 1 petabyte of data each year for the Cal Alert for wildfire systems. But as we're using this technology, when it's impacting consumers, that's important. And as more surplus lines is impacting homeowners and personal lines, be very prudent to understand there's going to be an added layer of protection. So, if someone's say, hey, I like this drone, but how accurate is your footage? Or are you doing quality control checks to make sure that what you're feeding us is appropriate? Insurance is the safety net for America. And that's one reason why we like precision. It's one reason why we're a little slower in implementing laws and regulations. So as you're going about our changing world, especially with all the cool new technology, recognize that whenever you're touching consumer lines and personal lines, take some care.
And with cybersecurity, you could be facing not only state fines and penalties, but federal as well because of GPA.
Now, I do think for cybersecurity, we haven't seen the litigation that people predicted. But what we do see is reputational risk, and we see harm, and we see, then we always have, the ransomware and hacker demands. Okay.
All right. Next on to claim services. Unfair handling, unfair trade practices.
Okay, unfair claims handling, we've all heard that term, right? And I think that most of the MGAs I have are relying on other claims experts, but delays in processing claims, unfairly denying and underpaying claims, failing to notify policyholders, the time frames are the key points. What I think that we saw a CEO of a major healthcare carrier assassinated in New York, and we heard it in the delay, deny, issues. As an insurance, we issue policies, they're contracts saying if these things happen, we're going to pay. And we have a responsibility to maintain the solvency of insurance companies, to pay no claim before it's time, to pay accurately. But we also have to look at things that can disrupt. If we know that there's an algorithm or something that's resulting in unfair claims, let's stop it. We don't want to tarnish our whole industry because we do great work and good work for the American population, and that can continue.
Is it wanting to move?
Okay.
Oh. Fraud.
Okay.
Sorry, I went too far.
Okay, so I'm going to give you a great research. I was part of insurancefraud.org. That's the Coalition Against Insurance Fraud. Historically, we've focused on workers' compensation, commercial lines, auto, and trucking, but there can be fraud in any area. If you're on the life side of the house, then you have AML, Anti-Money Laundering, and the Bank Secrecy Act. Make sure there's suspicious activity reports go in. But when you have fraud, if you see something funny, most states do have a fraud division or SIU division, and they will help you, or they'll tell you if it's not them, because not all state departments of insurance can handle it. They might say, hey, I'm going to refer you to this unit in the state attorney general's office or something like that. Take advantage of these resources because they can help you. Fraud, takes away from the bottom line. It's premium leakage. It's a lot of problems. Federal fines can range up to $1 million in the U.S. Patriot Act. There could be personal liability for compliance officers in severe cases. I hate to see that happen because so many times legal and compliance is the last to know. And fraudulent activity, like in Florida where we are, you can have penalties up to $50,000 per violation, which can escalate. I don't see I think in insurance many times sanctions are business risk, stopping us from being able to continue doing business, right? Litigation risk has been lower. We haven't seen huge penalties, financial penalties. I have a Massachusetts matter now that is shocking, and it's been going on for a year. It's not published or anything. But I do think that states like New York are going to change. If you look at the New York Department of Financial Services and you look at their penalties, you'll see massive penalties, $1 million penalties on the banking side. The DFS has hired people from the Consumer Financial Services Board and other federal agencies, and I predict to you that things are going to ramp up there. I have 3 dormant New York enforcement actions. I can't get closure. One, I really want closure for a client and can't get it, but I do think that we're going to see more higher penalties, especially in that state. And like New York, like California, they're a pain in the neck to do business, but they're too commercially important to ignore, right?
How about mitigation strategies?
Okay, so an AML compliance program using AI-powered software can help identify suspicious patterns and know your customer. There's things like Verifin, Actimize. There's a lot of good compliance software that's available to you. A big thing, Frame, is know what you do, know what your legal duties are, determine if you're doing them, and train. In all these areas, it's the same thing.
All right. Moving on to marketing and advertising, and marketing being just generically pretty wide, what would you say are some common traps for MGAs?
Okay, so I talked to one MGA, and they were from offshore. They were offshore, UK firm, and they said, "Well, we're not advertising; we're just doing LinkedIn." In this case, it was they were doing surplus lines, and they said, oh, we can now do this type of policy. Well, if it's surplus lines, I'm hoping it's surplus lines because it's so critically important to industry, you can't advertise to consumers. You can't advertise to businesses or people who are going to buy it. You advertise to producers. So you're going to, you can have the same ad that's in business insurance should not be something that can be seen to be attracting customers. I talked with some of my friends at CV Star, and we were talking, and they said, did you see this LinkedIn thing? And I said, yeah. And I said, we're watching. And I said, oh, have they taken business from you yet? They said, not yet. You can be sure that the moment they lose a big account, there's a DOI who's going to know about it. So recognize that it can be social media, it can be TikTok, LinkedIn, radio, TV, billboards. So you've heard this before. We always want to avoid misleading marketing, misrepresentation. Know what the policy says and then go from there. Avoid false statements about policy coverage or ensure financial strength. And have a folder, file, books and records. Books and records is a legal duty for, what you're doing, how you're doing it. If you're saying this is strong and sure, put that information, in your e-file. And finally, no rebating.
Well, what's an example of rebating?
Well, rebating's giving anything of value to induce business. And in the P&C side, we used to be so concerned about, giving away a free calendar or whatever. California has recently done something that's interesting. It's on referral fees. Paying referrals if there's no expectation, not depending on sales, has been an industry standard. But California Best Title got tagged because they were giving free videography services, and they were told they had to stop that. I think we'll switch to reinsurance because we're running out of time. Yes. And I just want to say, make sure for surplus lines, pay your surplus lines taxes. When you're doing unauthorized placement, pay attention to the rules. That when you have more due diligence and other things that are required, and recognize that even though you have freedom from freight and forms, the courts are now imposing different rules, like we talked about Illinois and California. And finally, I would say to you, for your compliance, think about what you're required to do. Make a list, audit yourself quarterly, semi-annually, pick a time, figure out when you need training and what training you need. And when you're seeing complaints or data points that say there are oopsies, adjust your training. And I hope that these tidbits will be helpful to you.
Yes. So finally, what we have out on the table for everyone is an MGA compliance checklist. Christa created this checklist for anybody and everybody that would like to use it. Please take it with you. And as we mentioned, there was a lot of content. I've got the notes. She didn't cover half of it. We just didn't have the time. I'd love to hear her horror stories. That is some scary stuff. But please be sure to see Christa at the end if you have any questions, because I know that we're out of time. Andrew, sorry about that. And thank you all for your time today.
Thank you.